Hi there, I thought I'd wait until the markets opened on Sunday night before I recorded my weekend webinar this week, 2:15 in the morning in the UK. So the markets have been open for a little while. I was hoping something might happen, but not really much going on. Gold, as you know, we were selling up around the 1965 area. This actually didn't work on Friday. We spiked up, but I'm sticking with the same levels in gold this week because obviously we are in this sideways trend, have been now for 4 weeks. So we just have to trade the range and wait for the breakout. Obviously, when we get the breakout, then I will react. I'll give us new trades and new targets. On my trade ideas sheet for silver, I do have some buy levels there. I'm going to stick with this short-term bull trend. This is a daily chart, very much sideways. If I go back to the hourly chart, you can see we've got some support around the 2400 to 2390 area from the trend line, from the confluence of Fibonacci levels, and the moving average is turning upward. So for now, I'm going to stick with the short-term bull trend and see if we hold the support level. Dollar index chart has been trading sideways for about 3 weeks. I think that the dollar can resume the bull trend, but really, when you look at it on the daily chart, we've only been going sideways since December. So 6 months, the dollar has really only been trading sideways. And for that reason, I can really only focus on the short-term charts. This is the Aussie dollar, which again, messy. Certainly since March, we've only gone sideways. Through June, been a really powerful rally. So in the short term, I'm going to stick with that trend. And if we move down to support levels, I would consider being a buyer. I do have a couple of buy levels on the trade ideas sheet that I just showed you there, but they're basically coming from Fibonacci levels, short-term moving averages and trend lines. The New Zealand dollar sell that I have on the trade sheet, which kind of worked on Friday, we certainly made a high for the day at the level. We just didn't come down far enough to make a decent profit on the trade, but I've got that level from the short-term chart, the 1 hour chart that you see here. Again, moving average, fib level on the 1 hour chart, but actually there is also a big level on the daily chart, which I'm going to show you. I quite like this one because on the daily chart, we've got the 38.2% fib at 61.45, 200 day moving average around the same area. And we've got this trend line from the break of the sideways pattern. So that 61.35, 61.45 area looks like quite strong resistance, not only on the daily chart, but also on the hourly chart. So I think that's one that's worth going for, and that is why I put it here on the trade sheet. Dollar Swiss, we were selling at 91.20, 91.40. Didn't quite make it last week. The high, 91.19 if I remember correctly. Yeah, missed my level by 1 pip. It worked so well the week before. If you were running shorts from there, if you're a longer term swing trader, that obviously worked last week. But it was frustrating because we spent so much time going sideways after managing to get into that short position. So look, if we bounce back, I've still got that trade on the trade sheet, but it is just so frustrating when you manage to sell right at the high of the week and then we just go sideways for days. Japanese yen's been really weak. Canadian dollar's been climbing against the Japanese yen. Again, when you look at the longer term chart, what kind of trend do we have? Well, I guess you could say we're in a longer term bull trend and we've had a correction and we're resuming the longer term bull trend. So that's what I'm going to stick with as far as trend goes. As you know, I'm a trend follower and trend for me is the most important thing to look at to start with. I'm going to consider that this is a consolidation phase that we're seeing over the last few days. No real sell signal, big red candle on Thursday, but that isn't enough to convince me that the trend is going to change. So I'm going to stick with buying at support levels, and I've got 2 support levels on the trade sheet at the moment. Sticking with that theme of the weak yen, the euro has been climbing steadily against the yen for quite a while now. If I scrunch this chart up, go all the way back to sort of mid-2020, you can see we're very, very clearly in a bull trend. So I'm definitely not going to fight that. In the short term, bit of consolidation, but no reason to sell into a short position. We don't have any particular negative pattern. I think eventually we'll break up. So for that reason, I've got a buy level on the sheet. And I've also got a buy level in the Aussie yen. Nearly 3 months of a decent bull trend for the Aussie versus the yen. Again, looking at longer term charts, bit messy, but we have this bull trend in the short term. So if we do dip back, worth trying along at a support level. Euro going sideways since December. So we've got 6 months of sideways action. This is really difficult to trade. Even the moving averages are flatlining now on the daily chart to show that we've been going sideways for so long. I've got a sell level for the euro versus the US dollar. This is mostly based on the 1 hour chart, but it does coincide with some moving averages. On the daily chart, I have to wait for some sort of decent pattern, some sort of decent trend but I have managed to scrape one trade idea for the euro versus the US dollar for this week. Euro versus the Canadian dollar, I think this is a really good level. When you look at the longer term chart, we had an enormous rally. We've got 38.2% fib support around 142.57, 61.8% fib support at 142.60. You know I like to break my fibs down. We've got good support around there. We've got the 200-day moving average. We've even got a Fibonacci fan line going up there, as you can see. So I'm going to consider that 142.60, 142.50 area is a strong one. I've had that level on the sheet all through last week in the hope that we would come down. We didn't quite get there, did we? We got to 142.81, so we didn't get a chance to buy in at my level. And we do have this bullish engulfing candle. So I do fear that the market has already turned around about 20 pips above my buy level. If that's the case, we're going to miss it. I can't suggest that you get in here because you're going to have a stop well below 142.10, so you're really going to have a 140 pip stop if you buy in there now. So that really doesn't work for me because a realistic target could be around 145.70, and I just don't like that risk reward. You know me, I like to have at least a 2-to-1 risk reward, but many of my trades are a 3-to-1 or even a 4-to-1 risk reward, and considering this would be only the first target, I don't fancy buying in right now. We're in the middle of nowhere. Pound versus dollar, I've really struggled with this because we're in a sideways trend. You know how I don't like these. If we just look from April, then this is very clearly a sideways trend. I've been asked whether this could be a head and shoulders pattern. No, I don't think so. You could argue left shoulder head, right shoulder, but in the context of the uptrend, which basically was from early March to middle of May, I think that head and shoulders pattern is way too big in the context of that rally, so I would ignore it. But keep the questions coming. So really, I can't call this a bull trend from December. I do have a trade on the trade sheet from the trend line resistances here. Might be worth a try. It's not the most convincing. There are further reasons from the weekly chart. Try that short with a trend line and moving average coming in around that level. I'm going to finish up with the US stock markets. I haven't been talking about them much lately because they've just been so tricky. S&P sideways for such a long time. We've been pushing up lately, but spending long periods of time on the weekly chart just going sideways. Anyway, now we're testing a 61.8% fib, and we're also testing the August high for last year. So the question is this the upper end of the range? Has this range been established? Do we turn around from here, or do we break up and push up maybe to this trend line, which is around 43.75, 43.80? From the daily chart, I don't see any reason to be selling into a short position yet. We had something of a doji on Friday, so there is a bit of indecision maybe. We are very overbought on the daily chart, on the slow stochastic, but without a sell signal. So personally, I would not be selling into the stock markets, and I would stick to buying into a support level. If you are trading the US stock markets, then you'll know that the Nasdaq has been in a really good bull run since December. I think this is a consolidation. There's no reason for me to think that the market's going to turn down. I wouldn't be suggesting a short position in the Nasdaq, despite the fact that we are overbought and have been for a month. But there's no sell signal. There's no particular resistance level. I'm surprised at how quickly we've run up, but it's all kind of AI speculation based, isn't it? So for me, if I had to bet on this pattern, I would suggest it's a bull flag, and eventually we will break up through 14,700 for a new leg higher. I'm not going to bother showing you the Dow Jones chart. Complete mess. I've no idea what to do with it. That's my summary for this week, but I'll be throwing out some videos during the week. So please do make sure that you are subscribed and you ring the notification bell.